BlackRock just accelerated the $2.3 million paper Bitcoin attack with this next move. And we've actually had some breaking news from the state of California that this new ruling could get a little fishy as more and more nation states, companies, and corporations start to put Bitcoin on the balance sheet. So what is this paper Bitcoin attack, you may ask? And how are BlackRock and Coinbase potentially working together to now get a paper Bitcoin attack and potentially suppressing that Bitcoin price? Because we're seeing massive amounts of buying. We're seeing millions and millions of dollars, and in fact, billions of dollars pour into Bitcoin on a daily basis. And we haven't seen the price run up until today, when we're starting to see Bitcoin hit a new all-time high. So we're going to get into all of that today. But first, check this out. The Bitcoin ETF becomes the fastest ETF in history to pass 70 billion assets under management. So as you're seeing, 341 days, and it's not even remotely close to these other ETFs. If you look, the next fastest was GLD, the gold ETF. That took 1,691 days. The BlackRock IBIT ETF did not even take a year, folks. 341 days before it reached that. So the meaning of all this is that, hey, we are seeing an acceleration of ETFs with assets under management. But the BlackRock wealth advisor came out and said this on live television today, which I thought was very interesting. So listen on closely to what he had to say about the ETF and passing that 70 billion in assets.
The adoption by wealth advisors, I'm curious how far along you think we are in that. Are we in the early innings? Are we in the middle innings? Are we, I don't think we're in the 8th or 9th inning, but, where would you put it at?
Very early. I think that what we've seen is a concerted effort by most of the largest firms to progress through their diligence and their research and their approval process. But as you all know, for new ETFs, it's typically a multi-year journey to get any sort of approval. We've seen that fast-tracked by a number of firms. When we talk about fast-tracking, we're talking about quarters, not months.
So we're seeing that this is actually accelerating and coming onto the scene very quickly. I mean, you're seeing it just in the numbers. Retail has come in at an explicitly fast rate, making this the biggest and quickest ETF growth we've ever seen in history. But he said something interesting, that the institutions haven't come on as quickly just yet. Well, is it because they're worried about some of the rumblings? Obviously, Bitcoin has its reputation, right? It's got a lot of volatility. If you don't know necessarily what you are investing in, well, maybe you're going to have those lettuce hands. But this rumor that has been floating around that I show you guys all the time on this channel, I think is something that you really got to take and be serious about, because this potential paper Bitcoin attack that Coinbase could be in cahoots with everybody with is because Coinbase essentially addressed this and said, hey, Baldilocks, Brian Armstrong came out and said, hey, trust me, bro, we're going to be all right. We're actually holding all of this. You don't got to worry about anything. But when we're looking at the amount of Bitcoin that Coinbase has, it's extremely, extremely alarming when we have Coinbase, essentially having 8 of the 11 Bitcoin ETFs, and Coinbase essentially just recently had a major hack under its realm. So Coinbase had a hack. They offered to pay $250 million to whoever had information in regards to this hack. And it was just allegedly customer data. But on the flip side of things, right, if you held your Bitcoin in self-custody, there's some potential global risks now going where they preferred to custody their own digital assets with private keys. But wars and extreme weather with examples in recent years from Israel to California show that keeping crypto in a personal version bank, like they're trying to scare you from putting Bitcoin in cold storage at this point, which means that you need to put it into something like BlackRock, right? The IBIT ETF. It's taken another 2.5 billion worth of Bitcoin, and it continues to grow. And the GLD passed, it took 4.5 years, 1,691 days to get this. And the BlackRock ETF took it in just 1 year. And we're starting to see all of this keep going. But the interesting thing on all the timelines of events that we're starting to see is that essentially BlackRock is worried about Coinbase, or at least it seems like it, because they have diversified out of just exclusively using Coinbase as their ETF custodian partner, because Coinbase has been essentially the custodian for 9 of the 13 Bitcoin ETFs. It's got multiple Bitcoin, or it's got a 2.3 billion or million, 2.3 million Bitcoin in its custody, and it seems like that's going to be a potential issue because it's got a custody for 90% of all Bitcoin ETFs. So as Bitcoiners, when we're talking about, hey, we need to have decentralization, you're worrying about centralization risks. This is the single biggest risk and threat to Bitcoin today. Full stop. There's no avoiding that. It's like it would be FTX on steroids. FTX was buying Bitcoin and buying paper Bitcoin, issuing that to their potential constituents. But Coinbase is doing it at an accelerated rate. And BlackRock has essentially the biggest ETF, and we've seen that grow here. And it's been a trusted partner for quite some time. And BlackRock is a money manager. So these money managers have seen it all. They're seeing their bond buyers move out of bonds into Bitcoin and buying that IBIT ETF. In fact, the retail buying is 75 to 80% of all of the ETFs. And we see these massive amounts of inflows just going in on a daily basis. If you look at IBIT, there's plenty of days where it's just inflow. Very few days where you see net outflows. I mean, you could probably count them on your hands at this point. Maybe hands, maybe 1 foot. But as out of the entirety of all of these ETFs, we're seeing majority come in as inflows and continue to inflow in because the Coinbase potential attack and going and buying through BlackRock, well, these companies that are putting Bitcoin on their balance sheet, they are not, let's repeat that, they are not majority of the time going to custody their own Bitcoin. Michael Saylor and MSTR, they are not custodying their own Bitcoin. They have custodians such as Fidelity. They've come out and said they had Coinbase. They have a few others that they diversified in. And so these publicly traded companies that are starting to skyrocket and really bring on to the Bitcoin standard, these zombie companies that we go over time and time again, they're all starting to come in and be custodied by Coinbase, right? I mean, look at this. These ETFs and other funds, they have 1.365 million. Governments, over 500,000. Governments are probably partnering with Coinbase as well. I mean, Brian Armstrong, Pollylocks met with Donald Trump. Is Coinbase custodying for the United States? You know, there's definitely some of these issues here, and we're potentially seeing it. And in fact, we're seeing now governments get a little bit more hostile towards Bitcoin for what it's worth. I mean, California just passed a bill that would seize idle Bitcoin left on exchanges. So maybe, just maybe, these states that are seizing Bitcoin and keeping them as their Bitcoin strategic reserves, well, maybe we're going to start to see that accelerate. Now let's listen in and get the details here.
Legal framework to legitimize digital assets, also known as cryptocurrency and blockchain, and unclaimed property law. California must protect consumer assets and embrace the legal recognition of digital assets, crypto and blockchain, as we continue to modernize our economy and the systems in our society. With that, I respectfully ask for a yes vote.
So it looks like Coinbase, or not Coinbase, California, excuse me, is saying all of these things. They're saying, hey, Bitcoin and digital assets are going to be looked at as property. And so if property is unclaimed after 3 years and left idle, well, that property can be seized. And so who is going to be seizing that? Where are we leaving these things? And it's interesting because this is all coming out at the same time where the SEC chair is saying that we should protect the right of all United States citizens to self-custody their Bitcoin. So let's listen into what he had to say.
Core feature of blockchain technology is the ability of individuals to have self-custody of crypto assets in a personal digital wallet. The right to have self-custody of one's private property is a foundational American value that should not disappear when one logs on to the internet.
There we go. So now these things don't need to disappear, and they're going to continue to do the American values, kind of push that through the freedom tech. So even though California went on and said all these things, well, we're seeing the Bitcoin price kind of run up here today. We're seeing the Bitcoin price shoot up at this notion that, hey, the United States and China potentially looking at the trade wars. We're seeing a bunch of different things. But on top of it all, Bitcoin price has been stuck for quite some time, even though the buying pressure has been drastic. I mean, you guys know and love that I love to show this chart about the amount of Bitcoin on exchanges. We're seeing massive amounts of buying just coming in on a daily, monthly, weekly basis, where more and more Bitcoin continues to come on or come off of exchanges. And because we're seeing these Bitcoin come off of exchanges, and we're seeing these Bitcoins start to really look at how it's going to, or they're starting to go from exchanges, into diamond hands like these Bitcoin treasuries where they're not selling. We're starting to look at nation states come in. They're not going to sell. Well, why was Bitcoin's price stuck for so long when we've been seeing these massive amounts of buying? We're seeing Michael Saylor come on, 21. We're seeing all of these different companies start to come on. I liked this here where we saw from VJ, where he's saying, why is Bitcoin stuck? There's billions in inflows from ETFs and treasury companies, and the newly mined supply of Bitcoin minuscule compared to the flow. What gives? There's a lot of paper Bitcoin suppressing the price. He doesn't agree with that theory, though. Look, I am one that I'm just pointing out this is a potential price. He's saying the simple truth was 100K was a magic number for a lot of longtime hodlers who happen to hold a huge fraction of the total liquidity of Bitcoin. So when Bitcoin hit 100K, a lot of these whales start to sell off. Well, maybe that's the case. Maybe we're starting to see the whales really start to sell off and honestly start to move Bitcoin and start to maybe enjoy their life a little bit. They've seen Bitcoin go from basically non-existent 15 years ago to over 100,000. So maybe, just maybe, they had tens of thousands of Bitcoin and now they're starting to trim a little bit off the top. Well, I guess time will tell to see how this bull market actually plays out. But I think everybody should be holding Bitcoin in self-custody and not really focusing on these ETFs, because now if you sign up at bitcoinwell.com/greencandle, you get 500 wishing well tokens. You make your first transaction, you get 500. So that's, you buy Bitcoin, you get 2 chances to win up to 1 million sats today. So for all of the 200 of you nearly in the chat on both YouTube and Twitter, the chat is very quiet, so I'm going to give you guys some sats here. Boom, 503 sats straight to the dome piece. Make sure you guys are smoking that like Cheech and Chong, and hitting the subscribe button with the bell notifications so you know when I'm going live. But if you missed that, if somebody scooped up those sats before you, go to bitcoinwell.com/greencandle, sign up with your email here today, Or if you've got 50K or must 50K bones, if you want to try to buy up to half a Bitcoin or more, scroll on down and then go to their Bitcoin Well Infinite. Now, you need to hold Bitcoin in self-custody. The easiest way to do that is Bitbox. You can go to bitbox.swiss/green candle. You'll see this. Go get the Bitcoin only edition of their Bitbox. You can use promo code Green Candle, get 5% off their entire order. And you got to do it because of what we're seeing, right? We're seeing these ETFs grow at an exponential rate. It is honestly shocking how quickly we are seeing these ETFs just explode onto the scene. It's historic. The generational run of Bitcoin has continued here. We're going to start to see these ETF products really start to take off. I don't even think they've truly hit their full potential just yet. I mean, I wouldn't be surprised if, by the end of next year, we're starting to talk about, hey, the Bitcoin ETFs, they might start to be able to compete with VOO, the S&P 500, and some of these other ETFs just because they're absolutely smoking everybody. But, we'll also potentially start to see companies like MicroStrategy, MSTR, now known as Strategy B, maybe 21, maybe some of these other Bitcoin treasury companies start to get into the S&P 500 and start to move into places where now we're going to start to see Bitcoin really start to take over. Wells Fargo talked about how MSTR, it was the untold story of how MSTR and Bitcoin are tapping in to the bond market. BlackRock even admitted it and said the quiet parts out loud and saying that Bitcoin is taking over some of this $300 trillion bond market. So all of these factors are cooking up for something very, very big. So I think Bitcoin is going to start to take off, and we're just getting started here, folks. Make sure you guys are smoking that like, hitting the subscribe button, telling a friend to tell a friend, and I will catch you guys all at the next one.